It's a fascinating thing we're observing right now, almost contradictory, wouldn't you say? We see these escalating regional tensions in the Middle East, the ongoing Iran-Israel situation, U.S. involvement. You'd think markets would be shaky, right? Especially real estate in the region. But there's this one market that's not just holding steady, it's actually, well, thriving. So let's unpack this a bit. This deep dive, it's really all about getting under the skin of how this geopolitical landscape is affecting Dubai's real estate market in such a unique way. Our mission today is pretty clear. Sift through the data, the insights, and give you a really sharp picture. We're talking investor sentiment, property prices, a huge inflow of high net worth individuals, and yeah, the booming ultra luxury segment. Think of it as your shortcut to understanding this really complex but honestly captivating dynamic.
It really is captivating. And what's so fascinating, I think, is how Dubai has consistently managed to position itself sort of against the regional currents. It seems to almost leverage instability elsewhere, turning challenges into growth opportunities and pulling in global capital, like a safe harbor.
That resilience is pretty remarkable. Makes you wonder, though, has Dubai always been like this ability to, well, benefit from turmoil nearby, or is this something new?
Oh, absolutely not new. No. Dubai's property market, it has this long-standing history, really, of acting as a safe haven. It often benefits when there's instability elsewhere in the region. Take the 2011 Arab Spring, for instance. Jones Lang LaSalle noted back then, Dubai's real estate got a real boost. There was a significant surge in demand, particularly for, luxury villas, places like Palm Jumeirah. Capital was just flowing in from other parts of the Middle East. And we've seen similar patterns before that, too. Think about the Iraq War, the Syrian Civil War, even earlier U.S.-Iran tensions. Analysts consistently observed wealth migrating to Dubai during those periods. Now, this isn't just luck, right? It's partly policy. Dubai's political neutrality, that's key, plus the robust infrastructure. And importantly, these proactive visa programs linked to investment, like the Golden Visa introduced in 2019, that directly encourages high net worth individuals, HNWIs, from conflict zones to buy property for residency, security, and a long-term visa. Now, the market isn't immune to everything. It did crash hard, about 60% after the 2008 global financial crisis. But interestingly, it bounced back strongly precisely when turmoil elsewhere in the Middle East made Dubai look like the safe bet again. And it's always the upmarket segments, the villas, the branded residences that tend to lead those recoveries.
Okay, so it really does sound like a well-established playbook, a kind of predictable safe harbor strategy during regional storms. So bringing it to today, the current conflict, how does this historical pattern apply now? Is it just more intense, or is something different this time?
Well, since late 2023, with this renewed Iran-Israel confrontation heating up,
Hmm.
you had Iran's missile strikes in April 2024, various U.S. military actions. Geopolitical risks across the Gulf have definitely risen. There's no doubt about that. And yet Dubai's market has remained, well, remarkably resilient. It's holding strong.
That's really quite the counter-narrative, isn't it? You read the headlines about escalating tensions, you expect fallout, but the money keeps flowing in.
Exactly. That's precisely what the data is showing us. There was a property analysis mid-2025 confirming this. It stated explicitly, despite escalating tensions, Dubai's property market is showing remarkable resilience. International investors are doubling down, seeing it as a refuge. And we have hard numbers from the Dubai Land Department for Q1 2025, transaction volumes, up an impressive 23% year on year. And a lot of that is driven specifically by those Golden Visa investments. What's also interesting is the source of the buyers. Buyers from Iran, who traditionally focus on the high-end segment, they've been playing a leading role recently. We're seeing clear capital flight from conflict zones, Iran, Lebanon, others, funneling these ultra-rich buyers straight into Dubai's off-plan and luxury markets.
Right, the off-plan market being properties bought before they're built. Shows confidence.
Exactly. It shows real confidence in the future. And when you ask investors why, they consistently cite security, neutrality, the tax-friendly environment. I saw a quote from a family office executive basically saying, Dubai ticks all the boxes for stability, and the property yields are competitive. Even when things got particularly tense, like right after those U.S. airstrikes on Iran in April 2024, sure, there were brief dips in developer stocks, but they were very short-lived. Institutional investors jumped right back in.
Competitive yields, stability. That makes sense. Okay, let's dive deeper into the hard numbers then. This general resilience is one thing, but what does the data really tell us about the momentum? Are we talking steady growth, or is it a proper boom?
Oh, the data for 2024, and especially Q1 2025, it really points to record-breaking momentum. It's not just steady growth. Cavendish Maxwell reported for Q1 2025, Dubai saw over 42,000 residential sales transactions. That's a jump of 23.1% from Q1 2024. And the total value, AED, 114.4 billion. That's a huge 29.6% year-on-year increase. Massive numbers.
Wow, almost a 30% jump in value. That's significant.
It really is. And off-plan sales are leading the charge here. They accounted for about 69% of that Q1 volume, almost 30,000 off-plan transactions, up over 32% year-on-year. The secondary market, existing homes, that rose too, but more modestly, about 6.6% in volume. And just for perspective, Dubai handled something like AED 193 billion out of the AED 239 billion nationwide property transactions in Q1 2025.
It's dominant.
So the vast majority is happening right there in Dubai.
Absolutely. And mortgage financing is keeping pace too. Q1 mortgages hit AED 20 billion. That's a 46% year-on-year increase.
Yeah.
So people are borrowing more to buy. It signals broad confidence.
Huge volumes, lots of financing. What about the prices themselves? Are they keeping pace with this activity or really surging, especially at the high end? Prices have definitely climbed sharply. Knight Frank reported overall Dubai home prices surged about 20% in 2024, and they're forecasting another maybe 8% rise in 2025. Prime areas are doing even better. Luxury home values expected to rise 5% in 2025. Ultra-prime sites were already up 18% in early 2024. Just incredible performance there. Villas have been particularly strong. Average villa prices reached AED 1,745 per square foot by Q1 2024. That's nearly 20% above their last peak in 2014.
Above the 2014 peak. Wow.
Yeah, apartment prices are also up, almost back to those 2014 levels. Part of the reason for the villa strength is tight supply, especially for new high-end ones. In 2024, for example, only 16 new villas were delivered in that ultra-luxury tier. We're talking AED 5,000 plus per square foot. Very few. And rentals are up too. A jump of 14.4% year-on-year in Q1 2025. That's driven by the growing expat population moving in. But even with rising prices, the net yields remain pretty attractive, roughly 5-7% for prime projects. That helps justify the valuations. Knight Frank summed up 2024-2025 as really an extension of the unabated recovery that started after the pandemic.
And the ultra-luxury segment, that's where you hear these almost unbelievable sales figures. How's that specific niche doing within this wider boom?
Well, that's where Dubai has really become, you could argue, the global epicenter. In 2024, Dubai actually led the world in sales of homes priced over $10 million. 435 such sales, worth $7.1 billion. That's more than New York or London.
More than London and New York. That's a fundamental shift.
It really is. It shows how Dubai has repositioned itself on the global stage for that top-tier wealth, not just regional, but global premier destination. And that momentum just carried straight into 2025. Q1 saw 111 deals over $10 million. That's up about 5.7% from Q1 last year. Palm Jumeirah is still the absolute hotspot. It accounted for 34 of those Q1 deals, worth over $500 million. And you see these trophy transactions regularly. Like in January 2025, a 6-bedroom Palm villa sold for, wait for it, $106.3 million.
$106 million for one villa.
Apparently a 16-fold gain since it last sold in 2015, just astronomical. And then there's the branded residences segment. That's booming too. Homes linked to luxury brands like Bulgari, Atlantis. Transactions there were up about 48% year-on-year in the second half of 2024. And they command serious premiums, maybe 42% on average over comparable non-branded properties. What's telling is that 83% of those branded units sold in late 2024 were off-plan. Again, that confidence factor. These projects focus heavily on amenities, security, sometimes even yield guarantees. They're likely to keep leading the growth.
The numbers are just staggering. It paints this picture of incredible, intense activity. But why? Why is all this capital flooding into Dubai right now specifically? What's pulling in all this foreign investment, these HNWIs? Is it purely financial returns or is something more profound happening?
Well, by pretty much every metric, Dubai is just soaking up capital. You had roughly 132 billion pounds in foreign direct investment in 2024. A lot of that coming from sovereign funds, global family offices, and the wealth migration surveys. They really kill the story. Henley and Partners projected the UAE would welcome between 6,700 and 7,200 new millionaires in 2024. That's the largest inflow for any country globally.
The largest inflow globally.
Yes. Knight Frank's numbers back that up. 7,200 individual millionaires entering the UAE in 2024, up from 4,700 the year before. And they bring serious money. Knight Frank estimates $4.4 billion was specifically earmarked by foreign ultra HNWIs just for Dubai homes in 2024, a 76% jump. And these new millionaires, they're coming from everywhere. India is a big source, about 31%. Europe and the UK, maybe 12-16%. Russia and CIS countries are around 14%. And the Middle East itself, about 20%. But crucially, in early 2025, we saw Iranians and Lebanese facing sanctions and instability back home being particularly active buyers. So Dubai has really cemented itself as a global wealth nexus, as some call it, bridging East and West. And if you connect that to the bigger picture, it's a textbook case of investor psychology, a flight to perceived safety, even with broader market volatility. You see it in sentiment surveys. Investment interest in Dubai and the UAE actually rises when geopolitical fears grew elsewhere. Consulting firms are reporting buyers explicitly saying they're looking for a stable jurisdiction that offers personal security, political neutrality, and asset protection. And that was especially clear in Q1 2025. Interest surged right after those regional hostilities flared up in April. There was a recent Reuters piece analyzing UAE markets. It noted that even just hopes for Middle East de-escalation in June 2025 boosted UAE stocks. And real estate developer shares were among the top gainers. Investors were reacting to whispers of potential costs, reduced U.S. involvement.
So sensitive to news, but the underlying trend is strong.
Exactly. In practice, family offices, funds, they're allocating more equity into Dubai real estate. Buyers are focusing on quality. Off-plan luxury, gated villas, branded residences with unique features. Lenders are still cautious, sure, but overall credit hasn't tightened dramatically. Despite the regional jitters, confidence in Dubai's long-term story seems remarkably solid.
Okay, so it's not just investment money flowing in search of returns. You're saying people are actually relocating, moving their lives, their families. What does that mean for Dubai itself, its physical and social fabric? Is this causing a demographic shift too?
Precisely. That's a really important layer to this. The political turmoil isn't just shifting capital, it's fueling this unprecedented influx of wealthy migrants into the UAE. Millionaires are genuinely voting with their feet. They're leaving instability behind and choosing UAE residency not just for investment, but as a new home base. And it goes beyond just buying a house. Many HNWIs are relocating entire businesses, moving family headquarters to Dubai. The data supports this. Record numbers of new golden visas issued to property investors, a surge in applications to set up family offices in UAE free zones. Looking at where they're coming from, you still have flows from Europe and Russia, with the Russia-Ukraine war maybe cooling slightly. Some Russian capital seems to be re-entering Dubai, especially with high oil prices. You've got steady Asian inflows, India, China, Southeast Asia. They see Dubai for stability, lifestyle diversification, and even wealthy Saudis and Kuwaitis are adding Dubai properties to diversify their portfolios, although Gulf inflows were already strong. And these moves, they have very direct real estate implications. More buyers with big budgets, obviously. Increased demand for family-friendly communities that's reflected in the shift we mentioned from apartments towards villas. And a significant growth in end-user purchases, people buying to live there permanently, not just investing. Cultural factors are playing a bigger role, too. The quality of schools, healthcare, that's becoming part of the draw, reinforcing that medium-term owner-occupier demand. It suggests a more permanent settlement of this wealth.
A real shift towards becoming home, not just a temporary haven. Okay, this is clearly a dynamic situation, constantly evolving. Given that the regional tensions are, well, ongoing, what does this mean looking ahead? What are the potential paths forward for Dubai's real estate market, considering these geopolitical undercurrents?
Yeah, looking ahead is tricky, but we can outline maybe 3 broad scenarios based on how the conflict might evolve. First, let's consider scenario 1, escalation. If the conflict widens significantly, or if key trade routes like the Strait of Hormuz are seriously threatened, global risk perception would spike. But, paradoxically, this could actually further cement Dubai's safe haven role. Some analysts predict that if tensions really persist or escalate, Dubai's status as that safe, neutral hub might only get stronger, driving even more migration and investment. Demand for high-end real estate would likely stay robust as investors prioritize preserving assets. You might see some short-term volatility, maybe higher construction costs, temporary inflation spikes. Regulators might step in to prevent overheating. Developers would probably push incentives harder. But overall, in this scenario, prices and volumes might actually keep rising, even with bumps along the way.
Okay, so escalation paradoxically might reinforce the trend. What about the opposite? Scenario 2, de-escalation.
Right. If a diplomatic settlement happens or a lasting ceasefire takes hold, immediate risks would ease. global risk appetite would likely recover. We saw a tiny hint of this in June 2025. UAE markets rallied just on hopes of talks. In this case, Dubai real estate growth would probably normalize, settle back towards market fundamentals. Prices might still climb, given the underlying demand and supply constraints we've talked about, but maybe at a more moderate pace than during these panic-driven inflows. Buyers who were perhaps waiting on the sidelines might re-enter the market, keeping activity going. Policymakers might shift focus to long-term sustainable planning.
And the third possibility, kind of a middle ground.
Exactly. Scenario 3. Prolonged tension. Basically a chronic low-grade conflict. Periodic skirmishes, tension remains high, but no major escalation or resolution. This would likely maintain the current status quo, that heightened risk perception globally. Dubai would probably continue to benefit as long as it remains physically unthreatened, but it might be more steady demand rather than a frenzy. Investors might start to diversify a bit more, maybe looking at other stable global markets too, just to spread risk. The local government would likely double down on policies, securing investment, maybe accelerating infrastructure, boosting sovereign fund support for key projects. You might see some cost pressures from high oil prices affecting building and living costs, but Dubai's diversified economy should cushion that blow. So in this scenario, we'd likely still see price appreciation, driven by capital inflow and tight supply, maybe record sales volumes continuing, but with occasional dips based on the news cycle. Now, across all these scenarios, one thing seems clear. Dubai's authorities and developers, they're likely to remain very proactive. Regulators are already making it easier for foreign buyers with ownership and visa rules. Analysts suggest expanding those golden visa programs, maybe pushing green financing and digital platforms. Developers will keep offering those long payment plans, virtual tours, ESG-aligned projects focusing on environmental, social governance factors, and global investors. They seem ready to keep reallocating capital into Dubai through REITs, private funds, ultra-prime projects, basically using it as a hedge against wider market volatility. So Dubai's market looks pretty well positioned to adapt, really leaning on its core strengths as that stable, well-regulated hub, which does raise a bigger question about the future of capital itself in such a volatile world.
What an incredible deep dive. It really throws Dubai's unique position into sharp relief, doesn't it? Not just a financial hub, but this stable economic haven that seems to almost feed on geopolitical turmoil elsewhere. It's such a powerful demonstration of how global events, even conflicts, can reshape economic landscapes in ways you might not initially expect.
Absolutely. And it really underscores that understanding these dynamics, it's not just about tracking numbers on a spreadsheet. It's about anticipating these massive shifts in global wealth and recognizing where stability, or even just the perception of stability, is truly valued today.
So as you listening reflect on all this, maybe consider this final thought, something provocative perhaps, in our increasingly interconnected, often quite unstable world. What does Dubai's success really tell us about the ultimate drivers of wealth migration? And what does a safe haven truly mean in the 21st century? What stands out to you about this incredible phenomenon?